Welcome, everyone. We're just going to give people some time to sign on, and we'll get started in a couple of minutes. All right, we've hit 100 people, so let's go ahead and get started, and others can join as we go along. Well, welcome everyone. Thank you so much for taking the time. I know December is always a bit of a hectic month, and as we're into month 7, 8, 9 of lockdowns for many of us, we're all probably very much zoomed out. So we really appreciate you taking the time to join us today. I'm Rania Nassis. I sit on the board of directors of the Society of Physician Entrepreneurs, and I also co-lead the New York chapter in the greater New York area. We're excited about this topic today as we've within the Society of Physician Entrepreneurs, as many of you know, and welcome to those that are new and joining and hearing about us for the first time. We are focused on early stage healthcare innovation, particularly around physician entrepreneurs, but we're open to everyone who's interested in healthcare entrepreneurship. And Jeff Hausfeld will tell you a little bit more about the Society in a couple of minutes. And one of the biggest areas that we focus on is, how do you, once you have an idea, how do you communicate your idea? How do you communicate it to potential customers, potential investors, potential employees, anyone you encounter, partners, et cetera. And so today, particularly, we're going to be focused on how you communicate with investors before and after funding. And we're really excited to be bringing this to you today with the George Washington University, in particular, the Tech Commercialization Office. We're happy to be co-hosting this event together, and I'm going to pass it over to Brian Koblitz from GW to tell you a little bit more about himself and the program there.
Thank you, Rania. If you can stop sharing, I'll go ahead and put up a few slides. Welcome to George Washington University virtually. If you haven't had a chance to visit, it's lovely here. It's starting to snow a little bit, but we're gonna keep marching right on through the workday. My job at George Washington is to manage our life science inventions. So by manage, that means that I identify them, evaluate them, and try to find business partners to which I can license the technologies. We'll develop them and eventually bring them to market. That's our end goal, is to help improve the lives of, for me, patients, either through new medical devices or therapies or software, anything that we can do to help make life better. And there are quite a wide variety of new ideas coming from George Washington, where we have about $200 million in sponsored research each year. So I strongly encourage you to reach out to us if you are in need of innovative technology. We can help you do that. We're very easy to talk with. We have a little bit more time available than some of the VCs around there. I think that due to money being a more flexible commodity than high technologies, I think that's the key there. We're always happy to talk to entrepreneurs and help make connections. And that's how, through the building of the network here, like with our partners, such as with the Society of Physician Entrepreneurs, we're able to help create new companies and bring products to market. So take a look at our website, but give us a call or email and we'll be happy to talk. Let's see if I can advance the slide here. There we go. A new service that we started this year to help connect our entrepreneurs and let you ask questions and learn is called GW Can. So this is our commercialization and network. So you can come to this website, sign up, and it's very easy to ask for help or get help with those issues you may be having as you're starting up your new companies. And lastly, I'd like to let you know that we had a virtual showcase back in September where we presented companies from both George Washington University and Georgetown University. These were all in the medical space. And these great pitches are 10 minutes long, and they're available to watch on YouTube, on our YouTube channel, GWU TCO. With that, I'll kick it off to Jeff Hausfeld, who we're very happy to collaborate with on bringing you this webinar.
Thank you, Brian, and welcome everyone. My name is Jeff Hausfeld. I'm one of the co-founders of the Society of Physician Entrepreneurs and the chairman of the board. And we are happy to bring this webinar to you today. SOAP is a global community that really promotes entrepreneurship and innovation in all aspects of healthcare. We are agnostic as to what the type of innovation you have, whether it's a health IT app, a device, a biopharmaceutical. We are here to help you understand the obstacles and the opportunities that lie ahead of you so that you can eventually commercialize your innovation. We have over 30,000 LinkedIn members and about 30 chapters worldwide. And we're happy to be here today with George Washington University. I am an associate professor of surgery at GW, and I've been so since the 1980s. And this is really the first time that SOAP and GW has had a formal collaboration, and I hope it's the first of many. But today we have a very exciting program. We're going to talk about how to communicate to investors before you get the money and after you get the money, and what that pitch involves. And we're going to hear from a panel that has lots of experience in teaching this, in understanding this, in actualizing this, so that they will share their experience with all of you today. And we'll have plenty of time to ask some very pertinent questions at the end. So my first panelist is Jonathan Dralick. He is an Associate General Counsel at Cognizant. Jonathan, I'll let you do the rest of the introduction and take it away.
Thanks, Dr. H. Hi, everybody. I've spent 8 years in executive positions within startups to see an inside view, and a dozen years at law firms representing startups. And for the last 10 years, coaching startup pitching, something that I seem to have a knack with. I helped a lot of companies raise a lot of money. Next slide, please. One of the important things when you pitch is to be excited and get your audience excited quickly, to be impassioned, show what you have that's great. This calculus may not exactly apply if we're talking about drug discovery, but there still has to be greatness to your story. It's great that you have a meticulous path to success, or that you know what you need to do to validate. But a succinct rendition of what you have and what you plan to do with it is critical. Next slide, please. There's a number of ways to get your audience excited. These days, there's so much attention on the medical and healthcare fields. And in my observation, a lot of new money coming in. Founders should not underestimate the opportunity to educate relative laypersons, meaning that don't understand medicine or technology so well, and teach them something. Even if it's complicated, if you manage to get them to understand a complex principle, you will, in effect, be creating a veritable expert that is going to broadcast this excitement and pair it for anybody else to hear So I think that's a critical point in medicine and healthcare. The other stuff should come naturally. You're trying to solve a problem. I always want to know who else is doing it. What else is there to do? What do we know and what don't we know? I also want to understand that you're the right person, that you have the right team. Are you especially well suited to rein in chaos? Do you have a talent for efficient operations? Do you have the IP? Are you holding an exclusive license from the likes of the GW Technology Licensing Office? As an investor, I obviously want to understand about the market as well. And there's no such thing as a market where a product sells itself. Maybe for particular pharmaceuticals or even more particularly orphan drugs. But I always want to hear a nuanced version of how you get it to which low-hanging fruit in a market. If you're selling warmers to go inside gloves, it's not a market of however many billion people are on Earth, or a slightly smaller subset of those that are in cold enough climates to wear gloves. It's the ones to whom you can get it easily enough, where the elasticity of demand is flat enough. In other words, I want a nice articulation of why you can approach a market successfully, and it ain't going to be in the billions. Importantly, slides seem to be part and parcel of a pitch. And I see this mistake all the time. You have two opportunities to speak to investors. You have your excited rendition verbally, and you have slides. If they're too busy, they're useless. If you have a topic at the top of the slide, it doesn't advance your plot. And I want to be able to glance at each slide. If I've fallen asleep or lapsed, my attention is lapsed from what you're saying. I want to read at the top of the slide to know that you're the first to market. You are the best in class. You will have return on investment in 9 months. In other words, the succinct telling of the story at the top of each slide. Next slide, please. Probably the most important thing to show investors is that you understand what's going on. If you think you have nothing or not much, you need to turn that around. Talk about what you do have, what you have done, even in baby steps. Do you have a license? Has some customer validated? Have you signed an NDA with some prominent customer? Do you have a board of advisors that brings credibility in a particular field? Whatever small steps you've taken are critical to show. And just as importantly, a keen understanding of what else you need to do, and an acknowledgement of those areas where you may not exactly know. There might be a fork in the road. There might be other unknowns, and you need to communicate a path to navigate those unknowns, whether it's through expertise, through bringing in gray hair to your team that may have specialized experience in a particular area, whatever it is. Next slide, please. When you start asking for money, this is when you really start to mix it up with your audience, to get personal. I would think of it as beginning a conversation. You want to gauge how your listeners can help you. You want to show enough understanding that if they dole out cash to you, you know exactly what you're going to do and how to get the biggest bang for the buck. Whatever your projections, they can be conservative, they can be very aggressive. It doesn't matter so long as you can confidently speak about all the assumptions that you're making. You know, of course, this assumes X, Y, and Z. I sat in a pitch with a couple of business students from Harvard, and one of my fellow judges at a competition said to the team, do you realize if you make these numbers over the course of the next 24 months, you'll have outperformed Facebook and Google and Amazon? Their response was not, well, of course, we're assuming all these things, and this is what we need to know, and this is where we need to get. Fault us for being optimistic. Instead, their response was, so it didn't fly. Next slide, please. I have sat at too many meetings of boards of directors where the investor sits there and wants to understand the progress that the team is making. When I say team, you need to make your investor feel like they're part of the team. But not just that. The investor brings knowledge, brings connections, brings wisdom, and you need to tap that and make sure they understand you're open to it. Next slide, please. There is nothing more important than honesty. What have we done? What have we done wrong? What we need to do to fix it, what we think we need to do to fix it, who we're going to ask to get to lend expertise so we can figure out how to fix it and on what time scale. What adjustments have we made? Do we still need to make to get from technological readiness to a minimum viable product? If you can open the kimono a little bit and show your thinking, even if you're not sure, it will always work better than trying to snow somebody. Somebody who is smart enough to believe in you is unlikely to be snowed in any case. So those are my thoughts, and I'll be eager to hear more questions as well. Thank you. Next slide.
Thank you, Jonathan. Appreciate that. That's great. So our next speaker, I thought we should have someone that is a little tangential to the medical and life science world, in that this is a person who does communication as a living. Margaret Watts Romney is a leadership communication coach. She has coached many people that have done TED Talks, both in medicine as well as other sectors. And I thought it would be interesting for all of us in healthcare and life sciences to hear what someone outside of our specific region thinks of how we talk to investors, what works, what doesn't work, what are the best practices. Margaret, a pleasure to have you here today.
And it's a pleasure to be here. Thank you so much for inviting me. I have to say, I love working with you guys. I have a title for you. I call you sudden leaders. People like you who have an idea you want to share. This might not have been the exact path you'd imagined for yourself 10, 20, 30 years ago, but here you are with something you want to put out into the world, something you want to innovate, create, bring a vision, and you know there's people waiting and watching for you to bring it forward. So I love working with you, and I'm really excited to be here today. So what I'm going to be doing is bringing you some ideas about presenting, whether it's in that official formal pitch situation, or just like Jonathan said, when you're educating whoever it is you're speaking to. I've got some ideas. I'm bringing you from my background with studies with the Neuro Leadership Institute and coaching speakers at 12 different TEDx events. But really, when you are speaking, there's really only 3 tools that you have, that we all have available to us. And that is our mindset, or in other words, our feeling inside, our attitude about our speaking, our content, the words we're actually saying, the story that we're telling, and then our delivery, our facial expressions, our body language, our tone of voice. This is everything we've got. So today what I'm going to do is go just for a second, just a little few minutes in each area, talk about some brain and neurology things that are a factor, and then a specific thing that you can put into action now to help you with each of these 3 areas. So first of all, let's talk about mindset. And one thing to understand about your mind is our brain has a lot more, most of you probably know this already being in the medical field, but your brain has a lot more systems and energy aimed towards looking for a threat than it does for celebrating reward. This is what has kept us alive and for so many years. And even though we're not running from animals on the savannah anymore, we are still very, very attuned to threat. And the problem with this is when our mind is in a threat state, it hampers our ability to connect. It hampers our ability to create. It hampers our ability to communicate. So one thing that's important is for us to focus on the reward, focus on your toward. Why are you doing what you are doing? I really appreciated what Jonathan said earlier about being excited about what you're doing and really aiming towards that. I had a client who was at a pitch competition, and she hated pitching. She actually lost her lunch numerous times before going into actual pitch sessions. And she had was about to travel across the country to yet another pitch contest. And she's like, I can't do this anymore. And we sat down and kind of talked about the story. Why are you doing this? Why have you given up hours with your family? Why have you sacrificed so much of your money and time for this? And she told me about what she pictured. And she told me about her vision. This is what the world can be. This is what I'm bringing to families. Her product was a special kind of photo album. And she told me about her ideas of families coming together and having these memories. And I said, that's what you need to think about when you're there. Let go of your ideas about, what are they saying? What is this person saying? I think they might be, they are going to catch me up on this. Like, bring in that energy. What is your toward state? And bring in your listeners with you. One thing for you to do with this, write it down. Get really, really clear about what you see you want to create. What does the world look like? And also you can get specific about your toward state in a pitch. If you have a specific pitch coming up that you are anxious about, what are you going to feel? What are you going to feel like when you walk into the room? What do you want to experience? What do you want the audience to take away at the end? Getting really specific about your vision makes your brain much more focused on that toward state, which helps alleviate some of the pressure from the threat that you might feel. And at the end, I have a handout that has a lot of questions to help guide you to your toward, and I will post that on the Slack channel. And we'll talk about, Jeff, you can tell me where it's best to post that, but I'll have it there afterwards. Next, let's talk about your content briefly. So this is really tricky, especially for you guys when you are educating. There's so much information that you have. There's so much that you've learned. There's so much to share, but your listeners, their memory is limited. And frankly, we just dump out what our brains can't hold. That's what we do every night when we sleep, is we luckily do not remember every single sock that we put on and breakfast that we've eaten over our whole lives. Our brains get rid of that. But how can you, when you're speaking, when you're pitching, make that impression, be memorable? There's a concept in learning called serial positioning, and that is we really strongly remember what is said first, and we really strongly remember what is said last. An example of how some of my students have used this is I was working earlier a few months ago virtually on an event for some CU Boulder faculty, and they were sharing about the research that they had done. And they had such an urge, very first thing in their pitch, in their stories, to say, this is who I am, this is the research, these are my citations, this is my thesis. And for this event, at least, it was appropriate to just scrap all that and start off with a story. Start off, this is why I want you to know about this. This is how I want you to care. And to give you an example of it, I'm going to just share, like, you can even tell just from the first 20 seconds of this faculty's presentation that she really focused on how she was connecting with the audience.
I walk up the stairs into the belly of an aircraft, and I am nervous. Everyone around me is nervous. We're at NASA's Ellington Field, just outside of Houston. It's hot and it's humid, and it's so loud that you have to yell to be heard. But it's also really exciting. We're about to do a
Okay, I'm just going to leave it there, but you can tell, like, I can see a few of your faces and you're like, wait, but what happens next? And you're going to remember that image that she shared. This is a fantastic talk, and it's a miracle. It's a beautiful work of art at under 5 minutes. I'll share a link to this at the Slack channel as well. And the other thing I'm going to do for you is I have a mini course that is on starting strong, and I will give a link to that. So you can see how she starts with just making it about, it's the images and it's a story she's telling right from the beginning. All right, let's talk briefly about delivery and some things to remember and keep in mind about your delivery style. First of all, this is where a lot of nerves come in. This is where there's the butterflies in the stomach and the cold palms. When you are under stress, you have your sympathetic nervous system and your parasympathetic nervous system. They're kind of battling each other. And your sympathetic is your fight or flight. Oh my God, here we go. We are under threat. We've got to do something about this. We need to act. But actually, this system can kind of be your friend, and we need to learn how to work with it. So a few years ago at TEDx Boulder, backstage, I was kind of like the mama bear backstage with the speakers before they went out. And this woman, her name is Laura Hockenberry. She'd never spoken in public before. And she's about to go out, sold out crowd, 2,200 people. And I say, Laura, how are you doing? And her face was flushed red, and she was breathing kind of funny. She was wiggling. And I was like, what's going on? You need anything? She's like, oh, I'm great. My body's just getting ready to be awesome. And that's what's happening before you're under a high stress situation. There will be a sensation in your body. Simon Sinek also played around with this idea. He went and interviewed a bunch of Olympic athletes before they performed, before they competed. He said, how are you feeling? How are you feeling? How are you feeling? And to one, they said, I'm excited, I'm excited, I'm excited. So understanding that part of those sensations are just normal and natural, and part of your body getting ready to be awesome. So you can give that energy, so you can give that excitement. When they do feel a little overwhelming, you can help calm them down and get kind of back in balance with your sympathetic and parasympathetic nervous systems by shaking, by moving, and by doing some deep breathing, which I'm sure you've all heard many times, but it really actually works. So there you go. There are some tips for you of 3 things you can put into action with your mindset, your content, and your delivery. And like I said, I'll put a personal speaking analysis at the Slack channel, so you can all kind of delve into your own speaking and learn some more things about it there. Thanks.
That was great, Margaret. And we got a lot of excellent comments from the attendees as well. A lot of questions about the Slack channel. You know that, before COVID, one of the benefits of SOAP is that we had in-person meetings at our local chapters. But since COVID, we have resorted to using a Zoom platform in order to continue our educational programs. So in order to enhance our ability to communicate with each other, we've created the Slack channel for members of SOAP. I'll let Rania tell you a little bit of that when we have finished with the presentations, because I want John to have his chance to talk to the group as well. So many of you know that it's difficult to go out and speak to investors to get them to put money up into your venture. But what if this was your business? Your business was to go out and solicit investors on someone's behalf. So that's what John does. John Bradley is one of the managers at Torreya. Torreya is an investment bank with offices all over the US and I believe Europe as well. And John's job is to help companies, not seed stage companies, but somewhat beyond seed stage companies, go out and seek investments from either family offices or institutional investors who will then, look at due diligence and either invest or not invest in your company. So I thought it would be good to have someone who does this as a profession to tell us what are the tricks of his trade. And not only does he have to go out and solicit the investor's interest, but then he has to be able to coach us in order to seal the deal. So John, it's a pleasure to have you here with us today. Please share your wisdom with us.
Well, Jeff, thanks so much. And also members of the society, really appreciate speaking here. And I'm not sure if they're hearing Jonathan and Margaret that I've got really anything to say that's going to really add to this. They did such a good job in covering everything. And they made some really good points that I think a lot of the investors, should really listen to in that respect. So my background is I'm a banker by trade. I've been at Drexel Burnham for a number of years with Mike Milken. I bought a New York Stock Exchange firm a number of years ago, just after Drexel. We built that up. We were about the 6th largest firm on the street. And then I left and bought a seat on the exchange. I formed Bradley Humlin Company. In the process of all doing that, I also started a number of companies in the generic drug delivery space, as well as in other particular industries, and then continue to do that over the years. I started and founded 2 or 3 of my own companies, Mystic Pharmaceuticals being one, and then I joined Torreya Partners in 2008, for which I basically am involved with family offices, for which I do direct investing for them. I manage their money, and then I work closely with companies, as Jeff just said, enabling them to be introduced to these families or institutions or strategic partners. So in that vein, you sort of over the years come up with some ideas as to what you really want to look at in terms of a company that's getting started and how you can move it forward with the investor. So I trade off about 5 different items that I look at: who you are, what you do, how you do it, where you're going, and how you're going to get there. And when you have those kinds of, if you will, objectives in mind, you want to really get into a point where you want to keep into the who you are story. You want to basically keep things simple, but you want to give a play as to the history, the management, your business background, so that people understand that you're experienced, you're knowledgeable about your product. You want to be sure to have a board of directors and advisors that complement what you're doing and have a broad understanding of the markets as well as your company. They can be active or passive, but you want to be sure that these are knowledgeable people and that they're going to embrace what your ideas are as relates to your company and where you're going. Then you want to get into, what you do. And in terms of that comes into your product, your technology, a description of the business. You want to keep it simple. I think Jonathan, made a very good point about, when you get involved in science and technology, a lot of people really don't know what you're talking about, but they're never going to tell you they don't, because they fear the fact that, they don't want to, 1, sound stupid, or number 2, they just want to go along with it because they don't really understand enough of it and are hopeful that as you go through the process that they will understand it. I wouldn't use acronyms because acronyms have a tendency to, well, I know what that means, but the audience probably doesn't, but you give them the credit that they do. So you want to be sure that they understand everything you're saying, and acronyms have a tendency really to move you away from that. And then you want to get into how you do this. How do you operate your business? What is it that differentiates you from everybody else, the competition, what your patents are involved with in terms of their differentiating, and who are the people behind the science. All too often, a lot of people just have one person doing a presentation. And what you really want is you want them to know there's a team and that the team operates together, and that your science, your technology has been created by people who have real credentials and are people that you all work together as a team. And there's more confidence on the investor's part to know that it's a team effort to get this done. And it gives them confidence in relation to what they're doing. So that's something that I think that people, would better understand. Then you have to figure out where you're going. And, a lot of people will explain who they are and what they're doing, but they don't describe where you're going to go. So you want to describe those goals that you've got for both the present and the future, and how you see your company involved in the present and the competitive landscape, and how you see yourselves developing into the future, and why, if you say that I'm going to be a particular billion-dollar company, why you're going to be there and how you're going to get there. So these are things that when people hear that you're going to be a billion-dollar company, you want to be sure that you have addressed that and can show them that you can be that. Not that everyone will. And there has to be something in that these people are going to understand. So you don't want to oversell. You want to keep your expectations in line with your goals. And you want these people to understand that, which brings you into the point of, how we're going to get there. So that really is part of going to reach those goals and explaining it to people so that they understand that. The more people understand about how you're going to get there, the better they're going to be aligned with you as you move forward. And you always want to be cognizant of the markets, both private, public, bond markets, et cetera. They're the very thing that are going to be able to continue to fund your business as you move forward. Because many times what happens is people just accept the probability that the markets will be the same next year, and they're not going to be. They're in constant states of flux. And in that respect, you've got to set your goals financially to meet the potential quote unquote black swan. And having been in the markets over all these years, managing money and starting companies, there is always going to be something coming up in which you're going to have to face that issue. So you want to be sure your planning for the financial future is such that those goals are protected with those financings. And I always have people go for 2-year money. You may not get it, but 2-year money is money that's long enough stretch in order to reach the goals that you've set out for yourself, so that you can see that you're going to be able not to have to raise money at a particular crucial time where the markets may, let's say June or July, go down, and you're in the process of having to need money, and you're going to be in trouble not being able to get it. So you just want to be sure that you've got all that lined up for yourself. And then in terms of, the presentation itself, there are a lot of people who have those presentations, and you want to be sure that you're going to be showing your revenue or your pro forma. Let the investor visualize the value proposition. He wants to see what it is that you've got in front of him, because that's going to be a reflection of the growth that you see in your company. So hockey sticks are not the best thing. Gradual growth actually makes people feel better. It gives them a sense that you know how you're going to get there, not by chance, but by the fact that you're going to be moving forward. So you want to also, which is very, very key for any team or any company getting started, that you want to identify your particular investor. You want to be sure you have the right investor. And sometimes that right investor can be anywhere from a family office. You might be an angel investor, institutional, could be strategic. But it's very important that you have that, because what will develop is, as you move into the secondary and tertiary financing, it's going to be that initial investor that you have who may complement you, give you referrals as you move forward. That money is easier to get than going out on a cold call with people that you don't know. So you want to be sure that if you're a development company only, you're going to give guidelines as to how you're going to get there commercially. You want to give that investor visibility what inflection points there are that are going to increase the value prop for your company as well. And as an entrepreneur, you really need to understand risk. And you have to understand, and as the man said, to thine own self be true. You have to understand that as you're looking at what you're about to do, you're going to be bringing a whole group of people in with you. And you need to understand that you can take that risk so that they're comfortable with you and feel that you know risk, understand it, and can take the company forward from that particular standpoint. So one of the things you want to do is you want to get your financing lined up. You want to be sure these reports are in line with, and be sure you have a good accounting firm. Be sure you have a good counsel. You want to contact your shareholders on a regular basis. Let them know your office is always open. As you get bigger, you'll have other people be doing that for you. But early stage investors, it's really important to keep the investor aligned, to make sure that you're meeting your expectations for him, that they're not too high, because that, in a sense, is going to really create a problem for them. So always remember your original investors. They're the ones that got you there. And a lot of people have a tendency over the years to forget that. And they can be some of your best investors over a period of time as well. The other thing is, if plans start falling apart, let your shareholders preempt them. Let them know what's going on so they can understand why. Because in understanding why, they know that you can right the ship and that you can do this, and they will assist you in doing this, especially if you have certain kinds of investors like family offices who have gone through this process. They know what it's like to fail, and they understand it, and they're there to help. I think a lot of people just assume someone will put money into a company, but what they really have to understand is those people want to help you. And in helping you, ask them questions. Don't be afraid to go to them, because they'll be there when you need it. And I can tell you and I've started a lot of companies and assisted them from seed on. And I can tell you, one thing that they really need to know is that you're with them. You have these other things that you need to do, obviously. Keep abreast of the markets, as I said, your cash burn, make sure you're comfortable with what you've got on your expenditures. Keep track of those finances. That's crucially important. Make sure that people know who your management team is. Let them know that there are other people in the company so that they can look at the company as a company and not as a person. You want to start later, once you've got financing as well, to begin to contact your banking sources, because there's a source of capital you'll need in the future. They're always looking for new investors, or rather new clients. So in that respect, as you get in early, you can get to know them. They want to know you, and they'll assist you actually early on as well, before either going public or before they even hire you or you hire them, in terms of raising capital. So there's a lot of things that you want to do up front once you've gotten out there and you've gotten your initial money. So one of the things is that afterwards, you want to be sure to plan shareholder meetings. You want to let the investors know that you're attending conferences, conventions, keep them abreast of all the things that are going on. And when public, don't let the short term interfere with your long-term goals. That's what everybody makes the mistake with. Don't allow the price of your stock to dictate your course of action. The market will always take care of your company if you're doing the right thing. You may not like the present that it's doing, but it will take care of it, and you will reach your goals if you meet all the goals that you've set out for your own clients. So invariably, one thing, and I've seen this happen so often, you're going to run into trouble. And I always call it, running into the wall. And certain entrepreneurs have the power to go through that wall. And it's all about risk, understanding it, and the drive. And it all goes back to both what Jonathan and Margaret said earlier. If you really have that drive, if you've got that quote unquote true grit, you can take a company at its worst problem and drive it through that wall, and then you'll become that much more successful later. And people are going to appreciate you for that. And I've seen companies do this, and teams are the ones that do it, not just the individual. So I hope I've added at least some insight to what both Jonathan and Margaret have said. And thanks very much.
Thank you, John. That was great. And we thank you for the insights as to how to engage with investors after you have received funding as well. I have a few quick questions for each of the panelists, and then we'll open it up. I'm going to start with you, Margaret. Margaret, give us an example of the best and the worst pitch you have experienced, and what we should do to either grab that opportunity or never to do that again.
Oh, I love this question. The worst pitch I saw was when someone tried to cram into their 7 minutes every detail that they knew, every detail of their company, every detail that they learned, everything that it was just too much. It was a fire hose. It was slides with 20 bullet points and 5 cents. Like, you just, at the end, you're like, I have no idea what just happened. The best was, I can even tell you the story still. It was a pitch 2 or 3 years ago of a company that had a device to help firefighters when they were in the field with communication. And the storytelling arc was so beautiful because it made the investor a hero by investing in the company and supporting the heroes out there. And it's gorgeous.
Great. Thank you, Margaret. Jonathan, we have to present to many different types of investors. How do you basically change your pitch to your audience?
Sorry, I'm unmuted now. It depends who you're going after. If you're going after someone with a sophistication of John, you obviously need to be prepared with targets and accounting and the type of money you want to raise. Another really excellent source of funding can be families, not family offices, but wealthy families who have some affliction by an orphan disease, that they don't understand this arena. So you're in effect educating that audience about what a startup does, how financing is solicited, and how the process works over the next 2 or 3 years. And then, as John mentioned, the new investor may not understand acronyms, technology, or medical specific information that you should, of course, never assume they understand. And you should walk right through it. Any sophisticated scientist or technologist will be impressed that you've explained it nicely in layperson language, even if it's beneath them.
Yeah, I agree. I mean, I find that when I'm out pitching for Biofactura, there are 4 or 5 different decks that I have for the different types of investors that I'll engage. And you have to basically monitor what you're saying so that it'll be well received by your audience. John, you mentioned the markets and the market conditions. What do you think of the markets today and over the next year as we come out of the pandemic? And specifically, with your prediction, how does that affect the negotiations around valuation?
Well, I mean, I don't think I'm saying anything that anybody hasn't heard even recently. I mean, you've got a for a better word, a casino market running for you right now. A lot of people may disagree with me on that, but I've managed money for 35 years, and I can tell you it's the kind of a market that makes everybody a little bit nervous. And when you talk to people, you've got people at home, people are taking cracks at the market through Robinhood, et cetera. There are some really good, if you will, industries out there that have been really just shackled because of what's happened to COVID. You're going to have opportunities there. The market will always give you an opportunity. It doesn't matter what the market is. I ran through the 60s and 70s, and I can tell you there were some markets there that, you just wish the hell you were never in the business. And so it's one of those things where you just shake your head. But if you just stick to what you're doing, that's great. But today's markets, you have to be very careful. So if I'm a company, I'm going out to raise capital, I have to be very, very understanding that people are looking at the market with one eye because there's a lot of volatility there. But there's a lot of liquidity in it. So they are very careful about how they're going to be putting their money and allocating it. On the other hand, moving over to the private market, you have a situation where there is no pricing. There's nothing there except for the valuation you're placing on your company. I think there's a great story, and I hope I don't belabor this, but in 1987, I had my own firm, and it was Black Monday on the day of the crash. And I had always run public-private in my portfolios. And what was interesting about that week, or if you will, that day, when people were calling, I was talking to them. The interesting thing about it was those who owned the private companies never asked a question. It was only those in the public markets. So what was happening was people had already had a defined understanding of their value for the company in the private market. They weren't concerned about it. And when you consider that particular day was the worst day the market's ever had in its history, it was kind of an enlightening point for me because I realized that over here in the public markets, they were watching their prices decline precipitously, which was having a great impact on their financial. But today you've got, I think, a lot of things that are overpriced. You have other industries that have taken a big hit. I think as we move forward, you're going to have the political aspects to it. COVID being what it is the vaccine going to work effectively? Is it going to have impact on what people are going to be able to do over the next 6 months? What's going to happen after that? I think the Fed has just made this, a candy store for everybody. So you've got low rates, you've got the ability to be able to finance anything you want through the debt markets. So there's an awful lot of, if you will, things going on, a lot of balls in the air. I think you've got to be very careful, not be afraid to have some cash, look for the opportunities when they come about, and they will over the next 6-9 months, and to take advantage of them because you really have to think long term. If you're a day trader, that's one thing. But if you're an investor, and as a company, you need to look at what's going on there because if the market dries up, you are not going to be able to get as much capital as you like. Your valuation won't be there, and you may not get any money at all, depending upon your development stage. So you really need to be careful. If you're out looking for money now, take whatever it is. Don't worry about the dilutionary effect. Be sure that you can bring in because there's a lot of money out there. A lot of money wants to be spent, and you don't want to get caught in a downdraft in the markets. And if you do, you're not going to be able to get back in again. So, it's as the man said, there are good times and bad times. And, we happen to be in all of them right now. But it's a fascinating market, truly fascinating.
Very good. Thank you, John. Rania, I'm going to hand it to you so we can go through some of the questions from the audience, and you can talk about the Slack channel.
Sure, I'll talk about the Slack channel so I don't forget. So as Jeff mentioned, because of COVID, we can't do in-person events, which were our main way of networking through SOAP for all our individual chapters. So we did a trial run with 3 chapters in Slack starting, I think, about a month ago, and we'll actually be rolling out organization-wide next week. It's a members only feature. So if you're a SOAP member, keep an eye out in your inbox. If you're not a SOAP member, now's the time to join at soapnet.org. And then hopefully we'll be able to make connections and continue the conversations there. And I think one of the advantages of being on Slack is that before you're pretty much limited to your chapter, networking within your chapter, whereas now you'll be able to network with SOAP members all across the country and all across the world, and including some of our speakers who are SOAP members as well too. This has been a really great conversation. Lots of interest, lots of questions. One question I have for the panelists, and maybe Jonathan, we'll start with you, is, when you want to build rapport with investors, and when you're pitching before the money comes in, it's paint the rosiest picture possible. Everything's wonderful, right? You don't really want to talk about the negatives. However, once the money comes in, you really want to take advantage of the experience that your investors have and their advice and their ability to help you. So how to transition from the really, really rosy picture to reality and sort of opening the kimono and saying, okay, this is where we are. These are where our challenges are. How can you help, without potentially having a negative impact on that relationship, because a lot of entrepreneurs worry about sharing anything negative with investors.
Right. So it's a big mistake to paint only a rosy picture. And I think, frankly, one of the best ways to begin an early rapport with an investor that you're facing during a pitch that you don't know is to level with them. If they ask a question, the answer, don't be a know-it-all. The answer can be, I don't know. This is what I think. This is why. This is how I'm going to find out the answer. And try to engage them in a way that they can contribute. And the chances are that's why they asked the question in the first place. If you set up this parallel channel that you're open for input, that there will be stumbling blocks, but you have the wherewithal, you have the confidence, you have the wisdom, you're smart enough, if you don't know the answer, to go to where you can go to figure out the answer. And that kind of dialogue shouldn't stop. It should have begun at the very beginning, and it won't hit an investor in the face later who's all of a sudden shocked. I mean, it's in nobody's interest for the investor to be surprised later.
Great. And John, a question for you. I mean, anytime we have an event about raising money from investors, a question that always comes up, particularly with first-time entrepreneurs, is how do you do that first outreach to investors? Obviously, warm intros are the best way to reach an investor, but if you're going to do cold outreach, what are the best tips for how you actually reach out, how you start to kind of open that conversation so that you can eventually get to the pitch? And I think I can see Jeff smile, and I know that he and I get a lot of times email blasts with the pitch deck and everything from someone we've never heard of, which is oftentimes not the best approach. So John, what advice do you have for entrepreneurs?
Well, obviously, the first people you go to are, friends of the family, et cetera. But, then reaching out after that and being able to find someone whom you think might be interested, I think you really want to go to somebody who has those kinds of contacts. I think a lot of people waste time by going around and trying to contact people that they think they know who might make an investment. I think you want to find someone who knows people that can get you those contacts. It cuts down on the time frame. And a lot of problems with people is they really get down, depressed because no one's listening to what they have to say. They have difficulty getting in front of people. Find someone who knows people, explain your story to them, let them go out there and get a coterie of people that they talk to, that they would understand, and they can bring them to you and get you started in that vein. That would help you out a lot.
I'd like to jump in there, and I totally agree, John, that let's go and figure out how do you get those warm introductions and how to meet those people that know the investors. I think one way is to go to a SOAP meeting and to go to a lot of other meetings, right? And because those people are there, they're out looking for new investments. Another place to go is university or governmental, local, and state events, right? So our job in our office, we consider it to connect technology, people, and money. So when we have an event, our goal is to get both the inventors, the business people, and the investors, all three of them in the same room. So if you're an entrepreneur and you're hoping to meet investors and you're in that room, you're in the right place, right? So you need to figure out where there are other situations to get in that spot and make those connections and be prepared with a 10-second, one sentence introduction of what it is that you're doing and what are you looking for. I want to go ahead and follow up on some of the points Jonathan was making about the timing of making these connections with the venture capitalists. And it seemed that there's something that you can do very early as long as you're as prepared as you can be, right? And hopefully you're learning from this context. If it's not the right time for that person to invest, you'll at least learn, when will be the right time. So when you hit that milestone, you can get back in touch with it, right? As far as when this business is based on university IP, should they be talking to investors before or after they have an option or a license to the IP, or does it matter, Jonathan?
I'm sorry, was that directed to me?
Yes.
Oh, so this is an interesting point. And one of the worst pitches I ever saw was a team that had technology that was spun out of a university, and they kept emphasizing how minimal the university's rights were, and how much independence they would be able to exercise over that IP. And we thought they had it exactly backwards. We wanted to know that the power and the resources and the intelligence of the institution was behind them in their work. So the greater point is, if you need to fill in a gap, well, explain your plan that you're going to license. If you have hit Eureka on your own, that's great. But I don't see any nuance in the timing of the disclosure about that. I'm curious to hear what others think.
Well, I'm happy to hear that, and I would advise, the companies that are interested in licensing that they should always go and start talking to people, because that's how you learn things, right? And maybe they don't have the ability to commit to the resources or whatever it is that's needed, whether it be for an option or a license yet. You're going to have to take a little bit of time and a little bit of money at that point to go and invest there. Maybe they want to feel out, what kind of investments they can get. And I would encourage them to do that. But probably before the investor puts money in, then they're going to want to, have that deal done. And we'd be happy to help them do that. So making the appropriate amount of commitment, that you need to move forward, I would say, is the thing to do. There's another question along those lines is whether if you're a university inventor and you want to start a company, do you need to have an experienced entrepreneur on the team already, or should you find, start talking to those investors, and maybe the investors know somebody that they would see as a fit for your team?
John, would you take a university a professor to an investor without having a business management team aside that person?
Probably not. It's interesting because, and I don't want to mention any names, but part of the problems over the years has been that, people like a team. They like to know that there's a management involved. The inventor, or if you will, the scientist. I mean, I know everybody's heard the story about, you don't want to bring them into the room because they could just talk you out of the room and take up all the oxygen. And the other thing is that, they don't necessarily have, quote unquote, which I don't believe, the business acumen to put this together and drive it through and do the things you need to do. But again, I go back to the fact that, you really need a team. But I've had scientists who have a company where there were just two of them, and they came out of a university in Pennsylvania who were making a presentation. And the problem with the presentation was I couldn't understand what they were going to do with the technology because I couldn't understand what the business plan was. Although when I looked at the technology, I thought, wow, this is really good stuff, but how are you going to get this thing moving? And it's something that people wear every day today, which is kind of interesting. They invented this. But if you had been there in those first few meetings, I mean, you would have, just walked out the door and just wondered how the hell they were ever going to get their money. But by the same token, they did. They went out, they got proper management, they put this together. It became a wonderful company. They were great guys. And as they began to move forward, they were making presentations because they suddenly realized what they had to do to complement the management team. And it just all fell in place and it all worked out really beautifully.
Right.
I would add one footnote there, if I could, please. The one cautionary note, yeah, you should have a team. Your entrepreneur should be smart enough to know what she or he knows and what she or he doesn't know. The one cautionary note is this: I have seen specialists or young people bring in like a seasoned entrepreneur, and the risk for me is, please forgive me for saying this, but the risk for me is that the person comes off as selling the fact that they're a serial entrepreneur and even a little bit slick. And if I can see that they're really an embedded part of the team, well, that makes a huge difference. But if they've been parachuted in for this purpose to deliver the business plan and to try to bring confidence of the business smarts, I can see right through it. It doesn't work for me.
All right, so it's all about how you tell your story and how you build your team. So in the interest of time, some of you have asked about a template for a perfect pitch. The answer is there is none. Make your own. This is something that each of you have to really study, understand, and create your own story. And with that, I'm going to read you this last paragraph before we end. This is by Katie Taylor, the CEO of Untold Content. I'm just going to read it to you. So what should we do about innovation storytelling? Simply put, stories matter to the art of innovation. There's much data to still unpack. Based on our content analysis thus far, we recommend the innovation leaders do the following. 1, build a content strategy for innovation storytelling at your organization. Share innovation stories that align with your organization's ideal innovation culture. Practice story crafting. Be iterative and adaptive to feedback and experimentation. Document and amplify innovation stories at the individual, team, and company levels. And train your people in innovation storytelling. Bring more visibility for the strategies and techniques available to support them in communicating their innovations effectively. There is an art and science to innovation storytelling. Our vision is that storytelling will no longer be perceived as a mystical or unempirical aspect of innovation, but rather an art form supported by evidence-based practices that is taught and discussed openly. So I hope with that, you have all learned a little bit about how to pitch to investors, how to make your pitch perfect, both before and after you have gotten that investment, and how to create the kind of story that each of you will be proud of. I thank you to all my panelists. I thank you to my co-hosts, Rania and Brian. It was a great hour of speaking and sharing information. Thank you to all the attendees, and we hope to bring you another SOAP GW webinar in the near future. Thanks, everyone.
Thank you. Thanks very much.
Thank you, everyone.